Good evening, everyone. Thank you for joining us today for the workshop on digital payments. Our speaker for the session is Manfred Pan. Manfred is an industry manager at Google, managing the Singapore government and consumer products portfolio. He has experience across HR, finance, and marketing technologies, having worked in companies such as LinkedIn and Stripe prior to Google. He is passionate about supporting businesses in their digitalization journey, especially as COVID 19 has made digital services an inescapable part of our everyday activities. Over to you, Manfred.
Thanks, Sudha. Hey, everybody. So my name is Manfred, and just give me a second. I'm going to share my screen. All right, Sudha, can you see my screen?
Yes.
All right, great. Thank you. So hi, everyone. Again, my name is Manfred. I'm an industry manager at Google, and I'm happy to be here today to share more with you about digital payments. And I think before we get into the content proper, if there are any questions along the way, please feel free to key it into the chat box or the Q&A box, where we will address all the questions at the end of the presentation. This is just so that we have sufficient time to run through the content during this session itself. All right. So in terms of digital payments, what we will really be going through today is a introduction, is a 101 for digital payments. So for some of you who have not encountered or utilized digital payments for your business yet, this might be something that's helpful for you. For those of you who might, there might still be some snippets here that you might find helpful to take forward into your business as well. So what we will cover today, I will start off with some insights around the growth of e-commerce. I think during COVID, all of us have seen the burst of e-commerce. Many of us would have also experienced it ourselves. And because of this accelerated growth, what does that mean from a digital payments perspective? Because it's an inescapable part of e-commerce as well. And I think the part that's really more important and more actionable for you is what are some considerations that you can have in mind as you are selecting a digital payments provider. So those will be the agenda items for today. So I would like to kick us off by looking at the growth of e-commerce. And these are some of the headlines that we have seen during the year, right? If you are looking at any news outlet or any publisher, everybody's talking about how e-commerce just absolutely exploded in 2020 as a result of the stay-home notices, as a result of the lockdowns around the world. So e-commerce is set to boom, right? It was already booming in the years preceding COVID-19, but COVID-19 has essentially accelerated it. And according to the McKinsey study that I've quoted in the flyer for this event, there was a study that essentially said that the adoption of digital services has accelerated by more than 10 years in APAC, and APAC is leading the way, right? And e-commerce is a big part of that. Is e-commerce the new normal? Even in Singapore, we are looking at how we can develop the country into an e-commerce hub. And digital payments and e-commerce are actually booming across South and Southeast Asia. And an interesting data point here is that by 2024, e-commerce sales in Asia is set to exceed $4 trillion US. And this makes it 66% of the global market. So as you are looking into the next 5 years, APAC essentially would be the key driver of the growth of e-commerce globally. And the thing is that this is actually led by a few markets. When you think about India, when you think about Indonesia, and even Singapore being such a small market, these are actually the countries where this growth is expected to come from in terms of absolute value and in terms of the annual growth rates. So some of you might be wondering, why is China not on the list? China already has a very mature and highly penetrated digital payments infrastructure. And therefore, these are the countries where there's a lot of headroom to grow. And when it comes to the online population last year, it's growing at a blistering pace. We're seeing 40 million people come online in 2020 in Southeast Asia for the first time. And when you compare it to the average in the past 4 years of 25 million people per year, this represents almost a 30 to 40% increase just on the annual growth. So this means that 70% of the Southeast Asia population is now online. To some people, this might look like a really high number. To some of you, there's a huge headroom. And I think there's a lot of optimism here to look at it from a headroom perspective, just because, in Southeast Asia, it's a growing population across the board. It's a young population. And you're talking about emergence of the population into the middle class, where you would increasingly have a lot more activities on e-commerce. And therefore, this is a hugely promising region for anything digital, especially for e-commerce. So some of this data points that I'm showing you today is actually coming from the Google, Temasek, and Bain economy report. So this is a report that Google actually partners with Temasek and Bain to publish on an annual basis for the past 5 years to look at the digital landscape across Southeast Asia. When we look at Southeast Asia itself, we are seeing an average of 36% of digital service consumers being new to the service. And you can see across the markets how that pans out. So Singapore and Thailand, we have pretty high digital penetration rates, but 30% is still pretty significant. And when you look at Vietnam, 41%, Philippines, 37%. And if you look at it just as the sheer number of people coming online, that's a huge, huge opportunity for businesses as well. And of course, I'm based in Singapore. Many of you are based in Singapore. So let's take a deep dive into Singapore. And we have actually seen that the circuit breaker has actually increased the digital service consumption by 30%, right? So essentially 30% of all digital service consumers are actually new consumers in 2020. And this kind of services include e-commerce, digital media, transport, food delivery. And this actually is going to be a persisting change. This is going to be a sustained change. It's not going to be post-COVID, people are going to go back to offline. People are already so used to online, for example, using Zoom today, that, it's going to proliferate, it's going to continue. And this is here to stay. And when we look at the time that's being spent online as well, there is a significant shift from before to after the circuit breaker. And it's almost a 25% increase, 20 to 25% increase. And this is also a sustained change. So people are spending more time on the internet, on mobiles, on the computers. And that's really where they would be increasingly consuming content and services. So keeping that in mind, and in the same report, the same economy report, digital payment transactions in Southeast Asia are expected to almost double to $1.2 trillion by the year 2025. So the thing is, this is huge, because we talked about earlier how e-commerce is going to be led by the APAC region and digital payments as well. This is where a lot of the new innovations are happening compared to other regions in the world. And as digital payment methods are proliferating, so many of you would be using at least one digital payment method, whether is it GrabPay or PayNow or WeChat Pay. This makes it really important for the interoperability of infrastructure and systems to be in place so that the financial ecosystem can be inclusive. So when we look back 10 years, and as a consumer, the predominant financial services platforms, I suppose, that I would have access to would be, I have a bank account, maybe I'll have a Nets card, maybe I'll have a debit or credit card, and that's more or less it. People who do not have access to these systems, they would usually have to deal with cash. But when you really think about it, it means that a big part of the populations, especially across Southeast Asia, in the rural areas, they are not going to be part of that financial ecosystem where there are all these large companies dominating, right? You talk about Visa, MasterCard, or the banks, because they can't open a bank account or they don't have credit history. They can buy big ticket items on installments and so on. So this is an opportunity now as digital payment methods are proliferating for us to actually, for governments and for payment providers to look into how do we ensure that whatever we are doing right now comes into an ecosystem, it comes into something of integrated experience for consumers so that we can start to now bring all those people who were previously missed out in the financial ecosystem to bring them into part of this. And when we think about the start of how digital payments came about, right? You would have your GrabPays, your GoPays, your WeChat Pays. And if I'm going to a merchant as a user of GrabPay, What if they actually accept Shopee Pay, but they do not accept Grab Pay, right? I would not be able to make a transaction. I can still do it with cash, but I wouldn't be able to use the system because there was no interoperability. So this is actually important, and that's a big focus area, even for Google as a company. So some of you may have seen that earlier this year, Google actually relaunched our Google Pay platform, and that is actually built on PayNow Rails. So what that means is that if you're doing a peer-to-peer transaction on Google Pay, it's actually using the same infrastructure as PayNow. So rather than replicating or creating something brand new, how do we leverage on existing infrastructure? Many of you would also be familiar with SGQR. It's actually the world's first unified payment QR code. And this now allows that scenario that I mentioned earlier, where it doesn't matter whether I'm using PayNow or WeChat Pay, I can actually go to the same merchant that accepts SGQR and make a payment seamlessly. But more importantly, in terms of bringing people into the financial ecosystem, we are looking at bridging the legacy with the innovative, or rather the new, right? And we're seeing, for example, Grab launching a digital Grab Pay card in the Philippines. Some of you may have read a couple of years ago about a partnership that Grab has done with MasterCard as well. So what this means right now is that if I never had a bank account, I never had access to a credit card, now I have a Grab Pay account. I topped it up with cash. And now I can actually apply for a MasterCard in my account tagged to my Grab Pay account. So I can actually use cash to top up my account. It becomes a prepaid or a debit card. And I'm actually now available to use any merchant globally that actually accepts MasterCard. So that's huge. And that's really what we mean by inclusive. And of course, the players are increasingly looking to partner with e-wallets. How do we bridge the gap? How do we really make sure that it becomes integrated, right? So this is some of the key things that are really exciting as we think about the world of digital payments. And as I go into giving you a bit more color around the landscape, I want to start off by giving you some definitions that the industry uses. So if you are researching about a digital payments provider, or you're speaking to a digital payments provider, this would be some of the terms that might come up quite often. So it would be helpful for you to know about them. So when we think about an acquiring bank, as the name suggests, I'm going to acquire merchants onto my platform, right? And in order to do so, usually acquiring banks or acquirers would have to get a license, typically awarded by the monetary authority for the country. So it's a license thing in many cases. And why I put acquirer/acquiring bank is that in the past, acquirers used to be banks, but no longer. So a lot of payment providers are also increasingly getting acquiring licenses, even though they're not banks. So this would be examples like Stripe, like Adyen, like PayPal. Okay. Many of the acquirers are also payment processors. So that's the last one on the list. And therefore, once I sign you on as a merchant, I would allow you to use my connection to the card networks like Visa, MasterCard, Amex, as well as to the issuing banks, and provide you with the suite of digital payment services. And I think the only other one that I wanted to highlight here is the gateway. So many times, when we think about acquiring banks who are also processors, they may not have the technology layer that allows for the interface between the customer and the merchant. So if you want my service as an acquiring bank and a processor, you would have to find another gateway partner to link into my processing and acquiring stack. So this increasingly is also getting integrated into a single system by many players, so that we're giving as much of a seamless experience to consumers and for merchants. So this is to give you a sense of the payment flow when a customer goes to a merchant to purchase something, right? And this could be both offline and online. Maybe for offline, with the exception of the gateway, everything else would look about the same. So essentially, the customer goes to a merchant. I want to buy a piece of pizza. It's going to cost me $10. I give you my credit card, right? And then the merchant will process the credit card through the gateway. And it actually gets processed on the back end. It gets passed through the card networks, whether it's a Visa, MasterCard card. And if the card is a DBS, MasterCard, for example, the transaction will also be passed on to the issuing bank. And in this process, the card networks and the issuing bank could either accept the payment or decline the payment for a number of reasons, which we will touch on later. So if the payment fails or payment gets accepted, it actually can't.
Did we just lose Manfred? Sudha, are you there?
I'm there. I see him, but he's on mute. He's gone on mute. Manfred, can you hear us?
I think there's a connectivity issue here. So we'll just wait for, I think we all lost connection here. So folks, let's just wait for another 2 minutes. Manfred would be online.
You would also, sorry. I think my screen just got cancelled.
Good to get you back, Manfred.
Oh, okay, sorry. Where did you guys drop me?
You were on the same slide as before, the one earlier than this, I guess.
Okay, so I haven't talked about this at all.
No, you haven't.
Okay, cool.
Yes.
Sure.
Yes.
So when it comes to online and offline payments, I would like to do a little bit of a comparison because there are some unique points for each of them. And let's start off with offline. Some of you may already have offline terminals, or because you go and shop so much, you're familiar with it. You would see that when you're making a payment for offline, the challenge sometimes becomes that you see so many different devices on the merchant's desk, right? So there might be one for credit cards and for PayWave. There's one for Nets. They will have the QR codes for SGQR or for Shopee or for Fave and whatsoever. So it gets really, really crowded. But the thing is that in managing this with offline payments, there's a quicker settlement, which means that when a transaction is confirmed, you as the merchant will get the money quicker, usually within 1 day or 2 days from the processors and the acquirers themselves. There are lower transaction costs for offline transactions versus online. And that's usually because of the perceived lower risk for offline transactions and higher acceptance rates, because the person is there with the card. I'm making a transaction there and then. There are very few factors in between that's going to prevent the transaction from being accepted, right, so to speak. And let's go to online. When we look at online, usually with online payment providers, they do provide you with quite a fair number of reporting capabilities. So you would actually be able to see the person who's made the transaction, what is their email address, what are the transactions that they have actually made before on my system, what is the last 4 digits of the card number, and you can actually get consolidated payment and financial reporting as well. And all that is actually really valuable for a business. There's also anti-fraud management. Many payment providers come installed with anti-fraud tools. And this can actually help to screen out, for example, if a person is using a card that has previously been reported as stolen or lost, and then it passes to the card networks or the banks and the payment gets rejected. With online payments as well, you can see that a lot of your favorite shopping sites, they actually accept a wide range of payment methods where, at offline sometimes, even though there are a lot of terminals, it doesn't necessarily represent a lot of payment methods being accepted. And of course, with online, there is the ability for you to now expand your business beyond your local market into international markets as well. And that's really, really powerful because now your business is limitless, right? That's borderless. And it's really about future-proofing because as we all have seen from the stats that I've shared, the future of payments, the future of commerce is going digital and you can't go without it. And let's take a look at the payments ecosystem. So this is not a comprehensive or exhaustive list. So I just wanted to give this to you as a visual into the various players that need to be part of this payments ecosystem, right? So I talked about acquirers and processors and gateways, right? Talked about issuing banks. These are the banks that issue the credit cards. The card networks, we are very familiar with them, Visa, MasterCard, Amex. But of course, with digital wallets, you talk about Apple Pay, WeChat Pay, PayPal, all these are increasingly coming. And there is increasingly that integration that I was talking about earlier in the presentation, where Apple is looking to launch their own, or already have launched in the US, Apple Card, which is their own credit card. Grab is looking to do that as well. And we should increasingly see more of that happening. You have your offline POS terminals that are provided by some of these key players. But of course, when we look at digital payments, they don't exist in a silo. They would have to exist as part of e-commerce, right? There's a purpose for it. So when you are a business that's looking to go onto e-commerce, it's also really important to consider how do I want to go online? How do I want to take my business online, right? What kind of resources do I have in place? So if I want a low-touch, easy approach, I might want to consider using marketplaces like Shopee, Lazada, Qoo10, and so on as a storefront to share my products online, to sell my products online, right? They would have payment methods, they would have logistics and everything sorted out for me. Or you want to have a little bit more control around the look and feel of your store. You want to have your own URL and so on. You can actually leverage on platforms such as Shopify, WooCommerce, WordPress, Wix, and so on as well, right? This actually cater for SMBs all the way to large enterprises that are looking to build their own platforms. And of course, if you want something that's really, really complex, you can actually build your own, bring your own programmers in to develop your own website. Though increasingly, we're not seeing as much of that. So keeping in mind the payments ecosystems and the payment flows, now let's think through what are the considerations as we select a digital payments provider. And it all starts off, or it all ends with conversion, right? So the whole point of an online transaction is I want to get the conversion. So if someone goes onto your store, they look at something that they're interested in, they add it to cart, and they don't check out. That is a nightmare because it's like this person is displays very high intent for your product, but in the end, for some reason or another, they did not check out. And there's no conversion, you don't get the money. It affects your bottom line, right? So the thing is, conversion is very important, and there are some pieces that actually make up this equation. The first is obviously the customer, they don't complete the checkout, or they actually submit the transaction, but you as the merchant have blocked a legitimate payment, or the transaction goes through all the way to the issuing bank or the card network, and it actually gets rejected, or the payment gets declined, and you don't actually get the transaction itself. So where can you optimize, and who can actually support some of this optimization? So these are questions that you need to ask as a merchant, as a business, right? But really, let's look at some of the things that can help to improve conversion. When we look at the customer, it's about removing friction in the checkout process. Are they being redirected to another page to complete their card details? That's not great. Every redirect loses you customers. Mobile optimization, is your checkout page or your website optimized for mobile? If they have to zoom in and out on their phones when trying to make a purchase, that's not a great experience. Or let's say if I'm on mobile and I have the option to actually use Apple or Google Pay to complete my transaction there and then, that actually helps to drive up conversion rates significantly. Do you actually offer local payment methods? So if I'm going online and I want to pay with Amex, right? But you only offer Visa and MasterCard, I can't complete the transaction. So do you have the payment methods that your customers are looking for? For merchants, how do you set rules? How do you make sure that you are running your fraud tooling correctly? And with banks, that these are some of the more complex things. I wouldn't go into detail here, but for large enterprises, there are a lot of things that they can do with their payment partners to try to enable and to squeeze out that additional conversions on some of these transactions. And for the purpose of this session today that many of you would have signed up for, you would like to know, what are some considerations that I should think about when I'm selecting online payment providers? So I think first and foremost, it's really what's the ease of setting it up and the cost, right? What are the resources required? How many engineers do I need? How much time is it going to take me to apply and to launch it, right? Historically, if you're applying for a payments processing agreement with the bank, it could take you weeks, right? And some of the normal latest technologies and platforms allow you to do it in the same day almost. So that's a huge difference in terms of your go-to-market. Is it an end-to-end service provider? Is it an all-encompassing gateway through to acquirer? Or do I have to integrate and sign up with two separate systems, a gateway and a processor acquirer, in order to provide payments? And of course, what are transaction fees? What am I paying to actually allow online transactions. So typically, for online transactions, you'll be looking at easily for SMBs, you'll be looking at about 3.5% of every transaction. So the thing is that if you think about it, are there payment providers that can give me look better rates, right? And of PCI compliance. So this is really important to note because for PCI compliance, this is really about this is actually sort of the business or the entity or organization that's actually ensuring that there's security across digital payments. So most payment providers will have to be PCI compliant, which means that they don't actually allow the businesses, aka yourselves, to store credit card information of your customers, and they should be the ones that are doing it. So you need to check that they are PCI compliant, because if there's an audit that comes around to your business and you're not, and your provider is not, you might actually get fined hundreds of thousands of dollars, if not millions. Range of payment methods. Does it offer the payment methods that are required for my business? If I want to add on more payment methods, is there additional work or additional cost to doing it? And if I'm operating in 5 countries, I'm working with you as a single provider. Are you currently available across all the countries that we are operating in? So those are questions that you could also think about. Fraud detection, right? Is it integrated? What are some of the default rules? What do I have flexibility in defining some of the rules? Is that 3D secure? So 3D secure is something that you are very familiar with. It's your OTP. When I'm making an online transaction, and then they say that a 6-digit code has been sent to your mobile, keyed in. So that's actually 3D secure. So what happens there is that if you include a 3D secure to an online transaction, and it actually passes and your transaction is successful, it means that if the customer is to actually raise a chargeback, which means that they're saying that I never made this transaction, it may be due to fraud or whatever, it could be due to fraud, this would actually go to the issuing bank and you don't actually bear the brunt of it. So 3D secure helps to protect revenue as well. So there's something important to take note. The ease of everyday use, right? The platform that I'm going to use, how can I manage my common transactions like refunds or chargebacks? What's the level of reporting that I can get? What's my customer checkout experience? Is it 1 step? Is it 3 steps? And also moving forward as technology improves, and I want to improve on my payment system as well, what's the effort that's required to make those changes? And I think last but not least, the reliability of network is important. I've had instances where I've made online payments on a weekend and it tells me that, sorry, my system is down for maintenance from this time to like Saturday to Sunday. I'm like, but that's when most people will make purchases. So that's not great for your business as well. So, think about what's the uptime, downtime, because that could actually have significant financial impact on your business. So this is some of the key considerations when you think about payment providers. And to wrap up on the presentation, I wanted to give a few key points as you are thinking through your e-commerce or digital payments journey. And I think at the very beginning, even before you get into choosing the partner, you have to ask yourself the questions. For payments, do I want to manage it myself? Do I want to appoint my own payment partner? Do I want to have to manage my own reporting, integration, setup, and so on? That's a lot of work if you don't have a dedicated team. Or do I want to actually leverage on platforms that already have some of these solutions? Do I have the capacity or capability to manage my own store? There are a lot of things involved: inventory management, fulfillment, marketing, and so on, right? And that would then lead you into, how do I want to get started, right? Do I want to build my own website? Do I want to have some kind of control, but I want to leverage on existing integrations that some of these e-com platforms like Shopify have, right? So if I set up a payment provider account, Shopify actually has partnerships with them, and then I can just do a simple link and use it on my Shopify store, right? For example, or leverage on e-com marketplaces like Shopee or Lazada, where I just get on there, right? I set up a store. The payment methods are already provided to me. They might actually help me take care of my logistics as well. So it's a low effort, but obviously low customizability as well. And then when you're done, right, it's really about launch. So moving forward, once you've already selected, set it up. What is my marketing strategy? Who is my target audience? And which are the channels that I should use to sell my products and to promote my products? I think this is some questions that are important to ask. So with that, I think I'm at the 30-minute mark, and I just want to open it up for questions. I've been talking for a bit now, and I'm sure that there would be some questions, and I'm happy to answer them.
Great, Manfred. Folks, please type in your questions in the Q&A section so that Manfred could pick it up and we could pick it up from there as well. In case you don't want to type in, please raise your hands and we'll give you the option to ask your questions. Manfred, would we be going back to the slide or would you want to close it here for Q&A?
I will close it here for Q&A, but if you need me to hit, maybe I'll just go back and I'll just land on that slide with a lot of words in case anybody needs to refer to it.
That'll be great.
Yeah. With so many, so I saw a question coming in. So with so many governments also entering the payments market, such as UPI, do you foresee a more central regulated system? I think in terms of when you look at UPI, it's very similar to Pay Now as a system, right? So, and these are systems where essentially it facilitates that peer-to-peer transfer in a much easier way. And of course, like it allows a lot of merchants to also take it up as an easy mode of actually collecting payments. But the thing is that in this case, I don't foresee that it's going to limit how private companies are thinking about coming up with payment methods as well. Because as you see, even as you see governments introducing their own systems, like in Singapore with Google Pay, we ended up actually leveraging on Pay Now to build our new Google Pay platform. And also when you look at the proliferation of e-wallets, in Vietnam, there are 34 e-wallets just in Vietnam alone. And some of them many of them don't even operate outside of Vietnam. So I think it's still a space where there isn't a dominant player. And I think there's a lot of people that's trying to fight for market share. And I think with regulation that's coming on board in the coming years, you should start to see a tapering off of the number of players. But I don't think that that's going to actually reduce the amount of competition in the market.
Got it. Manfred, I have a question. What are the key areas that you should take care of when you're choosing your payment provider?
I think when we are choosing a payment provider, I think it really depends on the needs of your business, and sometimes it is a trade-off. So I'm saying this from my time in my last company instead of from my Google hat. Many of the clients that I used to speak to at that point in time, they would actually be they might actually get higher transaction fees, right? Because they are SMB, they don't really have a lot of power to negotiate. But the thing is that off the back of that, they would then, say that, can I find a platform that allows me a lot of the ease of reporting or the ease of setting up so that I don't incur costs somewhere else, right? Whereas for larger businesses, they would actually have the teams or the manpower to actually do some of the more resource-intensive, manpower-intensive ones, kind of management for maybe lower transaction fees, just because of the volume that they have. So I think it's usually a trade-off. As a business, you just need to look at the resources that you have, the bandwidth that you have, because ultimately you want to focus on making money for your business, and the payments should technically be just working for you on the back end.
Got it. So that means different different payment providers have different fees, and there is no regulated standard percentage that they reduce?
So there isn't a regulated percentage that they can charge, right? Because in its demand and supply, if I'm going to be charging 10%, nobody's going to use me. I think there are standards, definitely, when you think about the acquiring licenses, right? That they have to get from the monetary authorities, the Pci Compliance, which essentially provides the security. Many of you might have heard of the Wirecard scandal last year. And sometimes, people are even more cautious about security now, and Pci Compliance is a very key element in that. And of course, a lot of the partnerships that all these payment providers would have that interface with merchants is that they will have to work with your Visas, your MasterCards, your Amexes, your GrabPays, or PayNows of today. And those are the regulated areas, right? So ultimately, there's still a lot of regulation in this space to operate in this space.
Got it. So we've got one question from Tarun Kohli. So he has asked twice, and the first one is it was similar to the one I had asked. So I've kind of typed in that we've answered that live. The second one is, can you give some insight about cost involved if one decides to move to Google Pay platform for online payments?
I would throw a question back to try and clarify. When you're saying for online payments, are you saying this from a merchant perspective, or are you looking at this from a peer-to-peer perspective?
Tarun, we would wait for you to answer that, what Manfred has asked over chat or over the Q&A. I think he's answered it. Just give me.
Sure. Okay, he's replied that it's from the merchant perspective. So from a merchant perspective, essentially, most of the time, whenever you are accepting payment methods like Google Pay or Apple Pay or Visa and MasterCard, it will typically be through a payment processor or payment gateway. So in terms of the kind of payment, number one is what kind of payment options do they offer? So many of them would offer multiple payment methods, and some of them may include Google Pay. And so the thing is, then you would have to speak with the payment providers to actually negotiate the rates for the various payment methods that you want to be able to accept. But generally, merchants would be able to accept Google Pay as a payment format online. Typically, it would be through payment gateways or acquirers, processors that offer that as a payment method.
Tarun, I hope that answers your question. Everyone else, let me remind you that in case you don't feel like typing in your questions, please raise your hands and we'll let you ask that question to Manfred. Manfred, while we wait for others to ask questions, I have another one. Is it true that, and I'm asking this on respect of folks who are still not really online savvy, that is it true that online transactions are more riskier than offline?
I think earlier on I talked about how offline transactions has a higher acceptance rate, right? Because someone is there, they're making the payment with the card itself. But I think the link that is missing is that is the person using the card really the person that owns the card? So really, when you think about the whole point of signing after the transaction is to verify the ownership. Nobody really does that anymore. Now you don't even have to sign for a lot of transactions that are happening. So really, when you think about the security, offline is really not that high as well. If you put it into perspective, for online, there are a lot of things that are in place, right? When you think about the payment providers having to be regulated, when you think about a lot of the very complex, sophisticated fraud management tools that are in place, and because they're actually tied in to platforms like Visa, MasterCard, Amex, and the banks, if I'm actually using a card and I'm making a transaction online, and usually when I make a transaction online, there are a lot more parameters for me to assess if this is fraudulent. So for example, if I'm using a Singapore issued DBS card, but my IP address is coming from Estonia, right? And I'm making a series of big transactions across multiple websites. So maybe your website is just one of them. But as a payment provider, they're able to look at this in aggregate and actually ascertain that this is actually highly likely to be a fraudulent transaction. And so like when it actually goes through into the issuing banks or to the card networks, this could actually be rejected. Or if the card goes through and it matches up against a database as a lost card or a stolen card, the transactions will be rejected. So there are a lot of guardrails that are in place to really try and increase the security and reduce the risk.
Got it. My final question would be, Manfred, that which digital wallet are commonly used more for global online transactions globally for a B2C segment?
I don't think that I would actually be the expert to answer this, to be honest. And I think that when you think about online payment methods, aside from your Visa, MasterCards, right, globally, there isn't really. When you look at your Google Pay and Apple Pays, a lot of them on the back end is actually tied to credit cards. So you still need to kind of have a credit card in order to use those payment methods. But yes, those would actually be more global. PayPal, yes, definitely, because of the reach that they have. They are truly global as well. And when you start looking beyond these players, it becomes very regional, it becomes very local. There isn't really something where it's a dominant player. I think PayPal has been in the game for a long, long time, but I don't think any of the digital wallet providers have come anywhere close to that at this point. So that's my personal opinion.
Great. Thank you, Manfred. This was really informative. Would you like to give some last thoughts to the to our attendees and to our viewers before we close the session for today?
Yeah, sure. So I think that the journey or the path to actually trying to come on board e-commerce or to adopt digital payments, doesn't have to be something that's complex. There are solutions across the spectrum of complexity, depending on you as a business. So there are a lot of businesses today where I'm a home baker, and then I'm going on to I need to collect online payments, right? And I can actually create maybe a site, or I can just create a Instagram page or a YouTube channel to do it, and then I can accept payments via PayNow potentially. So I think there is a lot of that integration that's happening. There's a lot of that democratization that's happening of payments and that bridge between online and offline. So I think as a business, it's really up to you to decide, who are my customers? What are their most commonly used formats of payment? These customers, where are they likely to shop, online or offline? And I think all of these kind of questions would then inform what's the best way for you to take moving forward to future-proof your business.
That was super useful, Manfred. Thank you so much for sharing those insights with us. This was crisp, and this was super relevant and informative. Thank you. Friends, we would have this uploaded online on our YouTube channel for you all to view. And with that, I would like to thank Manfred to share these insights with us. Our next session is on 10th of March, where we'll be talking about digital transformation, keeping up with the times. Gary Lim, the regional lead at Google, would be talking to us. We are about to, Sudha is about to launch the poll, and we'll request you to please fill in a quick poll before we close the session for the evening. Thank you all. And thank you once again, Manfred, for this really
Thanks, Sidhi. Thanks, Sudha.
Session with us today. Thank you.
All right.